It's amazing to think that we're back over $30,000. In fact, right now, $30,200. And what's even more amazing is that if you think back about 2 weeks ago, you had the biggest names in investing and the biggest names in crypto telling us that potentially it's time to get out of crypto. In fact, even one of the biggest VCs in Silicon Valley, 𝗬𝗓𝗏𝗏 said, if you're in crypto, pivot to AI. And then we had this publication over here tell us that now may be a good time to consider quitting crypto. And even Jim Cramer, of course, had to come up and said, I've had it with Soldano. Be that as it may, we are back. We are so fucking back. We're back above $30,000 on Bitcoin. We're even getting a green day in the altcoins. But this is really what I want to talk about today, because you can see we're having a big day in the altcoins, but the altcoins that are actually running, in fact, let me move my screen. So if you look at the altcoins that are actually running, 𝗕𝗏𝗁. It's like we didn't learn anything in the last cycle. We didn't learn anything about this whole meme coin game. And it's frustrating because we're getting to a point now where we say, should we follow the smart money or should we follow the dumb money? That's the big question. It seems like the dumb money starts rallying before the smart money actually rallies. If you were going to put your money into, say, a Solana or a 𝗕𝗏𝗁, a lot of people say rather put your money into a Solana. But nonetheless, when the market rebounds and 𝗕𝗏𝗁 rebounds first. And that's really what I want to talk about today. I want to talk about what narratives are actually running and whether we should be investing in the smart narratives or actually investing in the dumb narratives. Then what I also want to talk about is I want to talk about that over there, because we have seen that in the United States, the regulators have had a big U-turn about how they think about crypto. Why have they had this sudden U-turn? How come 2 weeks ago they were all out and wanted to kill crypto, and today, well, they've changed their tune completely? That is what we're going to be talking about today. Going to be a fun show, going to be a big show. Let's go. You know, I do find it so frustrating because we spend our whole lives researching crypto. We spend our whole lives deciding what the best chains are. We spend our whole lives deciding what the best fundamentals are in every single token. And then on the day when the market actually rallies, the token that rallies the most is a meme coin with absolutely zero value. And it admits it's got absolutely zero value. And if you look at the rest of the coins that are pumping, you've got Conflux pumping because of this China narrative. You've got Stacks pumping because of the Bitcoin narrative and the fact that everything else has been declared a security. And it's getting a little bit frustrating as an investor, because where should you put your money? Should you put your money where the smart money is, or do what Fred's doing? And Fred came into work yesterday and he said, you know what? I'm not going to play with the smart money anymore because the smart money is going into all the smart tokens. I'm following the dumb money. I'm going to just follow the dumb money because the dumb money is what rallies. And we said, okay, well, you know, that's so dumb. You're going to lose all your money. Meanwhile, the person who's smiling the most is Fred, because he put his money yesterday into 𝗕𝗏𝗁, believe it or not. And so he's smiling more than everybody else. So I know that's what we're going to talk about today. We've got a big show today. So listen, if you are new to the channel, welcome. Subscribe. There's a button under there. Subscribe. 636,000. 637. Must be 637. We are flying. Now we have our sights set. We want to become the biggest crypto channel out there. We're doing it with your help. Also, if you are here and you are part of the fam, welcome. Smash the like button. Let's get this show on the road. Let's talk about the alpha. Let's talk about where we were 2 weeks ago versus where we were today. Because 2 weeks ago, just 2 weeks ago, everyone was telling us that it's time to actually leave crypto. Vox said, now may be a good time to consider quitting crypto. The mood was absolutely terrible. Jason Calacanis, I was very surprised by Jason Calacanis, because I would have thought that one of the smartest VCs in Silicon Valley knows better and is experienced enough as an investor to say when everybody is running out of an asset class, that's when you run into an asset class. But he didn't. He said, you know what, if you're in crypto, rather pivot to AI, where all the money's actually started to flow into. And then, of course, Jim Cramer. Not that I pay much attention to a guy like Jim Cramer, but he was also everybody on that day after Binance issued, after the SEC issued Binance with the regulatory action. Everybody was basically saying, look, it's the end of crypto, get out of crypto. And I must say, it really actually did feel like that. It really felt like this time wasn't going to be different. This time it was the end of crypto. But one of our analysts actually said, listen, this is the time where you should be buying. He plotted it on a chart and he tweeted it. His name's the Irishman, Joe the Irishman. He tweeted it and he said, this is actually a great time to be buying because everybody here is capitulating and everybody is saying, get out of crypto. And this is the best time to actually be buying when this happens. And he tweeted it and he stuck to his system. And he bought this dip at 24,800. I know because I saw it. And today he is euphoric, like the rest of Twitter. He is absolutely euphoric with his gains. So the one thing that I've started to realize, the one thing that I've really started to realize in crypto is this asset class ain't going anywhere. And as a function of not going anywhere, every time that I feel the most uncomfortable to buy something, that is the right time to be buying something. I must be honest, when Coinbase was attacked by the SEC, when Binance was attacked by the SEC, I must say, I didn't think it was the end of crypto, but I was super demotivated. And I found it very, 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 very hard to deploy money into crypto. I did deploy, I'll be honest, I deployed a little bit of money into Bitcoin, and I deployed a little bit of money into Ethereum, but I was a little bit nervous about deploying money into the altcoins. And maybe there's a big sign in what I'm about to say. Maybe that is a reason to be getting into some of the altcoins even now when it feels very, very, very uncomfortable. We'll talk about that. But the main thing is that when everybody was against crypto, when we felt that it was the worst, once again, it proved that it was the best time to be buying crypto. And you can see that because, as I said, Joe the Irishman, he took his bet, 24,813 is when he started to ladder in. Today, as he says, submit and chill. That's what he's doing. He's submitting and chilling. He's submitting and chilling in Ireland. That's pretty much what he's doing. We struggled to get a show out of him because he's submitting and chilling because he's become so rich from his Bitcoin trades that he doesn't actually need the money from working at Banter. So I don't know if you ever see Joe, or maybe you should tweet at Joe and just say, look, Joe, we need you. Help us make shows because even though now you're very rich, you need to help us make shows. But I think the main thing is to say there's two lessons out of this. The first lesson here is to say that you need to make sure that when you feel the most uncomfortable to buy, that is when you should be buying. And when you feel the most uncomfortable to sell, that is the time that you should be selling. And every single time that I've tested that narrative, every single time that I've tested that technique, it hasn't failed me. And if I remind you, go back 2 weeks ago. How did you feel 2 weeks ago? I bet you that a lot of you were actually thinking of leaving crypto. A lot of you were thinking we've made a terrible mistake. A lot of you in your heads wrote down the value of your investing. Fast forward 2 weeks, look where we are. We're higher than we've been, and we're testing this ceiling that Bitcoin hasn't been able to break out of. And I'm pretty confident that this time we are actually going to break out of the ceiling. And this is the same ceiling that 𝗓𝗏𝗏𝗃 says that if we do break this 30,000, then he is actually becoming a mega uber super bull. That's what basically 𝗓𝗏𝗏𝗃 is saying. The main thing is to be buying when it feels uncomfortable and to make sure that you are actually in the market, specifically in this market. If you're out of the market, if you're out of this market and sitting in cash, or if you're running out of the market every time that we get one of these threats, then what you're doing is you are buying when it is safe to do so, and it feels safe to do so now, which is, by the way, 30,000. And you are selling when it felt wrong, and that was at 24,800. And that is the wrong way to go about it. The main thing is to be buying when you feel uncomfortable. And the second thing is that you need to make sure that you are actually in the market, because in this market, what you can see is that the majority of the returns are coming in a very, very, very short number of days. So in 1 week here, 36.79% return. In 3 days here, 18.73% return. In 1, 2, 3, 4, 5, in a week here, 44.9% return. In 3 days here, 10% return. In 3 days here, 11% return. In a week, 25% return. You need to be in the market. If you're sitting out of the market and you're trying to time this, and you're trying to time these breakouts, it's like as if you were to draw a line over here, you would only get half of this pump. What you want to be doing is you want to be entering into this market when the market goes down on all the red candles, and you want to be holding and making sure you hold, because this market will inevitably come up. Because we have now proven that crypto is an asset class which ain't going away. No matter what happens, no matter what the attacks that the governments have thrown against us, no matter what other attacks have come for crypto, we see that crypto is a resilient asset class. And no matter how you look at it, we are still the best performing asset year to date. Bitcoin is now up 81% year to date. Even Ethereum, which is actually underperformed, is up 57% year to date. So no matter how you see it, Bitcoin keeps surviving despite all these short-term attacks. And in the long term, I mean, just look at the difference in returns between Bitcoin, gold, and the S&P 500. I'd love to see this with someone putting Ethereum onto it. Hint, hint, 𝗏𝗧𝗏. Hint, hint. Hint, hint. Hint, hint. I'd love to see if someone put an Ethereum return here. Hint, hint, 𝗏𝗧𝗏. Okay, so, I mean, if you would have held Bitcoin for 10 years, you would have had 29,000% returns versus only 175% returns on the S&P 500 and 49% returns on gold. Oh, let me switch that off because that is extremely, extremely frustrating. So the main thing is to be in the market, because if you are in the market, then you get these returns. If you're trying to time the market, I'm not sure you're going to do such a great job, because you probably would have missed all of this and you probably would have been scared away by the market, by the movement in the market over the last couple of days. You need to have a system. I think the best system is a system that Joe deployed, and that is max pain, max fear is when you get in, and max euphoria is when you get out. And it feels like it's a little bit euphoric now. We'll talk about that in a second, because it does feel like the market is a little bit euphoric. At the same time, you cannot deny that the volume is real. The breadth is real. The volatility is real. The price travel is real. In fact, 𝗏𝗏𝗏 says that this Bitcoin breakout is legit because it's confirmed by volume, breadth, volatility, price travel, price action, time, momentum, SR level. He says, no matter what metric you look at, this Bitcoin rally is actually real. And that is why I think that this time we may actually break through this 37. That, and I'm going to show you something a bit later on in the show. When it comes to these pumps, it is super, super, super important that you respect the pump. It's super important to respect the pump. Am I right? I mean, it's super. If you don't respect the pump when the pump is happening like this, or as Ivan says, because I think Ivan actually says it best. He says,
guys, respect the pump. I respect the pump in all assets. Why? Because it's kind of like karma. You know, the power of the pump always comes back to you if you respect the pump of other people. It's crazy, but I have this belief that whatever pumps, you have to pay respect. Because otherwise, if you like, oh my God, this scam coin is pumping again, actually you are kind of rejecting the pump from your life. Maybe it's a bit out there, you know, woo-woo, but we all gotta believe in something. And I do believe in the power of the pump. It's kind of like, you know, let the pump be with you. I went to bed yesterday. I told you guys on Twitter, good night and let the pump be with you. Okay, this is how I see. It's like this force. It's like this force that is all around us. And if you are really inviting the pump into your life, it will come.
So remember, you've got to
respect the pump.
You've got to respect the pump. You've got to invite the pump into your life. You know what really worries me about this is that when you listen to rules from an 18-year-old, like I'm listening to a rule from an 18-year-old, he's telling me to respect the pump, respect yourself, respect others. These are the golden rules of respect. You have to respect the pump. If you don't respect the pump, let me explain to you what happens if you don't respect the pump. You short when the market, like this guy, like this trader on GMX, who decided that he's going to short this pump because he didn't respect the pump. He disrespected the pump, okay? And he shorted here, then he shorted here, then he shorted more over here, then he shorted here, and here, and here, and here. And he just keeps shorting and shorting and shorting. And right now, as he stands, he has $1.8 million in collateral. This guy is going to get destroyed. He's about to get destroyed. I'm going to show you why he's about to get destroyed. Because I think the path of max pain today is the opposite of what everybody's thinking. And today, what is everybody actually thinking? They're thinking it's time for this pump to end. The pump is over. We missed the pump in Bitcoin. And I don't blame them, because if you look at the Bitcoin chart over here, look at that chart. I mean, that's quite an aggressive candle. And usually when we see a candle like it, what we imagine is there's going to be some kind of consolidation, and then maybe we're going to start coming down again. But that is what the market is expecting. And what I've learned is that when the market is expecting the market to come down, then the path of max pain is what is actually going to happen next. And what is the path of max pain here? It is a God candle. If you look at the open interest on Bitcoin, the thing that would hurt the market the most right now is another green spike. So yes, I do think that we've had a pump, and I do think that it's maybe time to consolidate and maybe it's time to start taking profits. But be careful. Keep some of your positions open, because I do think that max pain here is what the market least expects. And what the market least expects is the market to break through the $30,000 level. Because after the $30,000 level, the next real resistance for Bitcoin is actually around 37,000. So once we clear this 30 to 32,000, let me just try and move it. So once we clear this 30 to 32,000, the next resistance point is around here, $37,000. That's where the next resistance point is. So I think the path of max pain here is that we actually break 30,000 this time. And I think you should be prepared for it. But don't be euphoric about it. So be prepared. Be prepared for the case where we actually break this $30,000 level. But be careful, don't be euphoric. And when I say to don't be euphoric, what I mean is that if you look at the RSIs, and I did look at the RSIs, you can see that most of the RSIs, most of the sentiment on most of the altcoins is actually now in the top. The RSIs are in the top. And if the RSIs are actually in the top, that could mean that this is a good opportunity for you to clean out your portfolio from some of those altcoins that you think aren't going to survive. So that is the prudent thing to do here. The prudent thing to do here is to say, look, I think this pump is actually going to continue, but there is a chance that the pump doesn't continue. And if the pump doesn't continue, what do I want to do? I need to clean the house. Time to clean the shop. So yes, I respect the pump, but I'm also being responsible. I'm doing the grown-up thing. I'm doing the non-degen thing. And what I'm going to do is I'm going to dump the tokens that should not be in my portfolio, because this pump may be one of the exit opportunities that I've got to clean up my portfolio and to get out of the shitcoins and to get into the tokens that I think are going to run. Because this market is very, very, very much a narrative-driven market. I don't like the fact that the market is narrative-driven. I'll show you in a second why I don't like the fact that the market is narrative-driven. In fact, let me show you right now why I don't like the market, the fact that the market is narrative-driven. If I look at the Banter Bubbles, now I know you've all downloaded the Banter Bubbles. I know that. You've all gone to the Apple Store and you've downloaded the Banter Bubbles and you are participating in our $1,000 competition every single day. I know that's going on. I know everyone's got it. And by the way, we double the $1,000 if you are active in one of the chats. I think there are people active in the 𝗵𝗵𝘳𝗶𝘳 chat. So the problem with this market is that if you look at the tokens that are actually running, it's 𝗵𝗵𝘳, it's Conflux, it's BCH that was running. It's narratives that are running. It's a narrative-driven market. Now, the problem with this narrative-driven market is this is not a long-term sustainable. These aren't long-term sustainable pumps. And I'll show you what I mean. So what is worrying me about this market is, if you look at how this market is performing, the tokens that are performing the best are 𝗵𝗵𝘳. Okay, I get why 𝗵𝗵𝘳 is performing. Well, I don't get why 𝗵𝗵𝘳 is performing. It's a meme coin with zero value. BCH, the reason why BCH is performing is because of the institutional narrative, and BCH being one of the institutional coins that people can buy. Conflux because of the China narrative. Stacks because of the Bitcoin narrative, and NEO because of the China narrative. So if you were to look at the narratives that are actually bouncing the hardest, then what you can see is that the narratives are meme coins, and it's not only 𝗵𝗵𝘳. I looked at BenCoin. Just look at what happened to BenCoin yesterday. So much so that BitBoy is he's euphoric. People have been trying to tell me people have been trying for years. You would think I would get sick of winning, but now I like winning too much. Bro, relax. Your coin pumped and then went straight back down to where it's supposed to be. In fact, it's supposed to be somewhere down here. But be that as it may, the problem is that what this market is doing is this market is playing narratives, and it's playing short-term narratives. And it's very, 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 very frustrating, because I really thought that after being hit so many times and being hit so hard, the market would actually start saying, look, we want safe investments, good long-term investments. Instead, no. What do? They go for the short-term wins. I want to show you something. Let's do something together. We'll play this game together. So these are the tokens that have pumped today. These are the fastest recovery tokens. And in fact, if you look at 𝗵𝗵𝗵 is up 51.6%. If you look at stacks, let me get a good stacks chart for us here. Let's go to here. Let's get a stacks chart. Okay, so stacks. What's it? It's STX, eh? Okay, so let's look at stacks on Binance. Look at the recovery. Look at the recovery on stacks in the last 3 days. So stacks in the last 3 days is up 55.2%. Now let's take another token. Let's take a Solana. So stacks is up 55.2%. Let's take this. Let's take another token. Let's take Solana. And let's go Sol USD. I'm gonna prove something to you. I'm gonna prove something to you right now. We're gonna do this together. We'll see. So Sol USD. Let's look at it. Stacks up 55%. 𝗵𝗵 up. Let's quickly just do one more chart. Let's get a 𝗵𝗵 chart. So trading view. Let's get a 𝗵𝗵 chart up. You're gonna love this. I'm gonna prove something to you now that. Okay, so 𝗵𝗵 USD. Let's go onto BitGet. By the way, it is listed on BitGet, one of our partner exchanges. Let's look at the recovery in the last week on 𝗵𝗵. 𝗵𝗵 is up 76%. Okay, 76%. Now I want to show you something. Let's go to Twitter. Let's create a poll. If you were putting 20K to work for 2 years, for 2 years, comma, no selling, comma, what would you rather buy? Okay, so let's do that. Now, let's put a poll. Let's go Sol, 𝗵𝗵. Okay, because logically, what you want to say is if the market is, if these are the tokens that are recovering the quickest, then these should be the best tokens, right? Surely, if the market gets hit, you're going to be buying the best tokens. Let's see how people respond to this poll. While we're doing that, let's quickly copy the thing here and do another one and say Sol or stacks. Okay? And we'll do it again. Sol or Neo. Because those are the narratives that actually bounced. And we'll keep monitoring this. We'll monitor this at the end of the show. And what I'll show you is that people are saying for 2 years, they would rather buy Solana. But what they're doing is they're following the dumb money in the short term. And it's very, very, very frustrating because here we are spending our days every single day learning, studying coins, doing the fundamentals, really, really, really determining which coins are the best coins fundamentally. And then finally, we make a decision on which are the best coins to invest in fundamentally, GMX, GNS, and all of those, only to come to the market and watch the market and have not garbage, some of them are very good, bounce. And it's super, super, super frustrating. And I think that there's some kind of lesson in this. The question you got to ask yourself is whether you want to follow the dumb money or whether you want to follow the smart money. Now, you can't tell me that the smart money is going to be buying 𝗵𝗵 over Solana. And I'm just using Solana as an example. I'm sure there's many other tokens like it. Or Neo over Solana. But those are the tokens that are jumping the most in the short term, which shows you that this market in the short term is driven by narratives. And there's a lot of money to be made in these narratives, a ton of money to be made in the narratives. But if you want to make money in these narratives, it means that you have to be awake and have your finger on the pulse every single day. And then you've got to deploy a very, very, very simple strategy. You've got to identify the narrative as soon as it comes out. You've got to identify the tokens as soon as they come out. And then you've got to press the button and play the game. You can't wait. You cannot wait. When we see a Bitcoin narrative, an ordinals narrative, you got to buy stacks. You cannot wait. When we see the AI narrative, you got to identify the tokens and you got to buy. Even though you know you're buying shit, you got to buy it. And you got to just play the game because you are playing narratives. That's all it is. That is one way of investing. That is investing in fundamentals. That is investing in narratives. Not investing, it's trading. Because if you're buying even to sell in a month or 2 months or 3 months, that is trading. If you are investing, what you want to do is you want to be buying stuff for the long term. And I think that this is where the catch comes in. This is where the opportunity comes in. What is the opportunity here? The opportunity is to say, if you want, are you guys joining again? Oh, God. So what is the opportunity here? The opportunity here is to say, if you want to trade narratives, here's a very simple formula for you. This market is narrative driven. And what do? What you do is very, very, very simple. You find the narrative, you find the tokens in the narrative, and you press the trigger. You say, I don't really care because I'm investing in a narrative. Identify the tokens in the narrative, press the button, play the game, roll the dice, pull the lever on the slot machine. If you want to be investing, it feels really, really, really uncomfortable now, right? If I said to you, listen, put your money now into Solana, you say, hold on a second, Solana hasn't bounced. Solana hasn't, it's dead. It's the one token that hasn't bounced. But then you look at the fundamentals and you say, but hold on, fundamentally, I believe Solana is going to recover better than all of these tokens. And in our Twitter poll, Solana wins every single time. Here we go, you can see. Every single time Solana wins. What does that mean? It means that people are uncomfortable. And what happens, what do we know about being uncomfortable to invest? That is probably the best time to invest. And what do you invest in? The stuff that it feels the most uncomfortable to invest in. What do I mean? Everybody's telling us that the narrative here is to invest in tokens that will not be deemed securities by the SEC. But maybe that's the wrong play. Maybe the play is to say that the tokens that have been deemed securities by the SEC have already been deemed securities. They've already been knocked to the ground. And if they are still here and they're still fighting, maybe those are the tokens that you want to pick up because nobody else wants to pick them up. And I know it feels uncomfortable now, but I'm also going to remind you that on the 5th of June, when everybody was telling you to get out of crypto, it felt super uncomfortable to be investing in these tokens. And so I'm going to repeat this again. In this market, you have to be really, really, really in tune with the narratives. You have to have your finger on the pulse. If you've got your finger on the pulse, there's a very simple formula that you can do. What's the formula? Identify the narrative because the narratives run. Buy the narrative. Buy any token in the narrative, any garbage, any token, AI, ETF narrative. Buy it. Pull the roulette slot machine, the roulette lever down, and just wait for the returns. Option 1. Option 2. If you're a long-term investor like me, because I'm not a trader, I can't trade, I don't know how to sell shit, then right now is probably the best time to be buying the stuff that most people aren't actually buying. The Cosmos tokens, Osmosis, all those tokens that haven't actually started to stage a recovery. The GMXs, the Solanas, maybe even the Matics. To me, that feels like what you want to be investing in. I'm going to show you a bit later. I'm going to show you a narrative, though, that is actually maybe worth just putting in a couple of tokens and just pulling the lever and just waiting for the returns to potentially come in. Because that is the narrative right now. I'm going to show you a couple of narratives. The first narrative right now is the ETF narrative. That's why Bitcoin is running. That is why Ethereum's running. That is why BCH is running. Why is it running? Because ETF. What do we mean because ETF? Everybody today is applying for an ETF. If you're not applying for an ETF, you're not cool. So now we have 𝗲𝗏𝗃 applying for an ETF. Then you've got Invesco applying for an ETF. Everybody is applying for an ETF. If you're not applying for an ETF, who the hell are you? You're not even cool these days. In fact, what I suspect is going to happen, you remember all of your friends that became vaccine experts when there was the vaccine, then they became interest rate experts when they became inflation experts when inflation started going up. Then they became interest rate Fed officials experts. those friends are now becoming ETF experts, because right now that is the narrative. The friends are becoming ETF experts. You'll see. You know who they are. It's all the normal names on Twitter that were vaccine experts. They were Ukraine experts. They were COVID experts. They were inflation experts. They were interest rate and Fed experts. All of those friends, every single one of those friends is going to now become an ETF expert, because everybody is now applying for an ETF. That is the hot narrative right now. We've made you guys a little chart here to see all the applications that are in. We'll share this link with you guys. You can see BlackRock has a new filing. WisdomTree just resubmitted the old application. Valkyrie, new filing. Invesco resubmitted old application. Bitwise, resubmission of old application. This list continues to grow because more and more people are applying for an ETF. They are going up against the SEC though. And remember, the SEC has got a 33-0. 33 spot ETFs have been filed for. 0 have actually been approved. But it doesn't matter, because right now that is the narrative. That is what people are playing. And you can see that because of ETFs, specifically in the United States, we have people buying in the United States. So what can we see here? First thing is, there are Bitcoin inflows to Coinbase custody. Who's storing their stuff at Coinbase custody? American regulated firms are storing their stuff in Coinbase custody. Then you are seeing that institutions are starting to bid up this grayscale, the GBTC discount. They're starting to close the CME futures gap. This is institutions, and this is institutions in the United States, because the returns and the buying is coming inside of US hours. That's what's going on here. Right now, the narrative is US money buying into Bitcoin because of an ETF. And remember, they've already got an ETF, but the ETF is a futures-based ETF, and futures-based ETFs don't perform as well as spot-based ETFs. And this is one of the arguments that BlackRock is using in their application. They're saying, look, you've got a futures ETF, but it doesn't perform as well as a spot ETF. In fact, it underperforms by about 11.33%. So that is why people believe that the spot ETF is actually going to be approved. That, and the fact that the person that is actually applying for the ETF is that guy over there. His name is Larry Fink. He's the head of BlackRock. And he is the policy whisperer to the politicians. That is what he does. They make the politics. They make the rules. They manage the US government money. They are the biggest fund manager in the world. And it does seem like what they have done in the last couple of days is actually go and whisper into the right ears to say, guys, this stance that you're taking on crypto, you're going a little bit too far with the stance on crypto. You have to do some kind of U-turn. And the latest in this bout of U-turns is actually none other than 𝗕𝗏𝗏. Because yesterday, our friend 𝗕𝗏𝗏 was at a congressional hearing, and he was asked, it was a very interesting hearing. We'll talk about the hearing in a couple of seconds. He was asked by Warren Davidson. Now, you may recognize Warren Davidson. He was the guy that drafted this bill to fire and get rid of Gary Gensler and his position in the SEC. So listen to what he said to Powell, and Powell admitted.
When I think about some of the dynamics that are going on in the market related to banks, non-banks, securities, not securities, one agency in particular has been very activist in this place over at the SEC, and it's kind of tangentially related to the Fed, but crypto and digital assets in the U.S. has got a market cap of around $1.1 trillion right now. It's been there for a bit. Do you acknowledge that this asset class has staying power in the U.S. economy?
It appears to have some staying power. Of course, that 1.1 trillion was, what was that a year ago? A lot higher.
Yeah, it's had some volatility in large measure due to the lack of legal clarity, and so hopefully this committee will help that quite a lot here this summer with at least two bills, one on stablecoins and one on market structure, and it'll be clear not just for Congress but for regulators, including Chairman Gensler, and obviously market participants, whether they're forming the ideas or investing in the ideas or participating in the activities. One agency.
He did acknowledge that crypto is a very, very resilient asset class, but I want to show you something. So you heard what happened there. Let me show you something. Documenting Bitcoin. I think it was them that uploaded it. And what they said is, Powell says that that Bitcoin is a very resilient asset class. Says Federal Reserve Chairman Powell says crypto appears to have staying power as an asset class. He did not say that. He was asked that, and he said it did. But anyway, also in this hearing, Powell was quizzed about stablecoins, and specifically, listen to this.
We do see payment stablecoins as a form of money, and in all advanced economies, the ultimate source of credibility in money is the central bank, and we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoins going forward, and that leaving us with a weak role and allowing a lot of private money creation at the state level would be a mistake. But nonetheless, again, I do appreciate that we've been able to be heard and share our views with the committee.
So that is, he got a question from Maxine Waters around stablecoins, and he said, look, I think that everybody needs that the Fed needs to have a big role when it comes to stablecoins. And I think that this is the next play by the US. I think the regulators are actually going to go after or going to go with stablecoins. That is what I think is going to happen. In fact, in June or July, when is the stablecoin? July. So in July, next month, they're going to be voting on a stablecoin bill. Now, there's a good reason why the US should want to keep stablecoins. The reason why US should want to keep stablecoins is very well documented in this Medium article. And it says, if you summarize it, what it actually says, it says, look, the US dollar got its prominence. It says the world ran on dollars. The euro dollar, which refers to the offshore US dollar outside the supervision of the US banking system, emerged in the 1960s. Not only did businesses use dollars, average citizens pay in many countries using dollars. To put it into perspective, euro dollars was estimated as staggering $14 trillion in 2016. But because the US used their currency as a weapon, because they imposed sanctions on people using US dollars, because they weaponized the US dollar, there is starting to be this huge de-dollarization. And one of the solutions to fix this de-dollarization is actually stablecoins. Because if you start accepting stablecoins, which are the easiest way to transfer money across the world at the moment, or stable money across the world, then you could keep the US dollar. You could keep the US dollar as a reserve, as the global reserve currency. It could be one of the things that happens. Anyway, now there is a bill that's going to get voted on, and it will probably be voted on as early as July. In this bill, the first thing is stablecoins will be regulated by the Fed. So the Fed will be the regulator for stablecoins, and you'll have to have a license to issue stablecoins. So people like Tether, people like Circle would have to have a license to issue stablecoins. Okay, there is no commingling of funds, which is great. It does protect consumers. A 2-year ban or moratorium on creating, originating, and issuing endogenously collateralized stablecoins like crypto collateralized stablecoins. So DAI won't be allowed to be used in the US. Any crypto collateralized stablecoin not allowed to be used in the United States. Compliant stablecoins must be backed one-to-one with highly liquid, high-quality assets. They would have to also meet the strict liquidity criteria, so regulated by the Fed, and allow approved stablecoin providers to have master account at the Fed, which would enable them to directly deposit their funds with the Fed instead of relying on commercial banks. Now, that is super important. Why? Because what happens is, because right now, Circle can't have an account with the Fed. Circle has accounts at Silicon Valley Bank and a whole lot of other banks. And if the bank goes down, then the stablecoin is at risk. But in this system, they're saying, no. Circle will get a license, and they will be allowed to bank with the Fed. And if they bank with the Fed, then all the bank risks and all the other risks actually fall apart. Why is this so important? Why did I decide to spend a lot of my time talking about stablecoins? Because stablecoins don't really go up or down. Why are we doing this? Because the US has to act now, and it has to bring some kind of crypto regulation and crypto legislation to the market now. Why? Because FTX. Why? Because of the Gary Gensler attack. If they don't come in and they don't start showing that they are regulating crypto, then they risk the elections next year. What is the easiest thing to regulate? It's a stablecoin backed by US dollars. When stablecoins become legal tender in the United States and they are backed by the Fed and there is no risk, we will see stablecoins explode. we will see the use of US dollar-backed stablecoins explode once they have the blessing of the United States government. What does that mean? It means more stablecoins. It means more money on crypto. It means more usage of the networks, Tron, Ethereum, even Bitcoin. We're going to see the networks used more. And who are they going to be used by? Big corporates. Big corporates moving stablecoins around and making their payments in stablecoins because now those stablecoins are legal. We'll also see that is also the first bill that gets more money onto the payment rails. And when there is more money in the crypto ecosystem, we are going to get huge pumps in crypto. Real institutional grade pumps, not the pumps that we're currently seeing. And so I think that the Stablecoin Bill, which by the way, 𝗕𝗏𝗧𝗏 spoke about back then when FTX collapsed, is the first step, and it could be voted on as soon as July. So in July, we may get the Stablecoin Bill approved. And I think it's a massive, massive, massive thing. So let me know if you think in the comments. Let me know what you think in the comments. Whether you agree with me that if we do get stablecoins regulated, it's actually very, very good for the crypto ecosystem. Yes, there are casualties. I mean, one of the casualties here is that we can't have, in the US, you can't have crypto-backed stablecoins. So goodbye, DAI, goodbye. I think Frax is Frax. I think Frax is now, it is collateralized by crypto, right? Frax is collateralized by crypto. So those type of tokens won't get the full benefit, but we are going to get many more stablecoins. And the more stablecoins, the more buying power on our rails. Think about it as a highway, and think about it as cars that are on the highway and cars that are not on our highway. We're just bringing more cars onto our highway. That's all it is. Freeway for the United States people. Highway, freeways. Yeah. So that is what I think is going to happen. He was actually also quizzed on a CBDC and CBDCs, and I'll show you what he said. Very, very smart answer.
If the Fed were to offer a direct individual accounts to citizens, wouldn't this be a direct threat to the financial privacy of many Americans?
Potentially, and that's why we would not, it's not something we support. We would not support, accounts at the Federal Reserve by individuals. That would not be. If we were to, and we're a long way from this, if we were to, support at some point in the future a CBDC, it would be one that were intermediated through the banking system and not directly at the Fed, for exactly the reason you point out.
So what he says is individuals won't have accounts at the Fed. Individuals have accounts with their own banks, and it'll be regulated through the banking system, kind of like a bank accounts today. So that is Powell yesterday, and I think it's very, 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 very positive. And what I think is happening right now is somebody has whispered and said, guys, you need to now lay off crypto. I'm not going to mention who that somebody is. You can decide for yourself. It's all there for you. I've basically spelled it out for you. But that is what it is. As a result of this, here, McHenry says, this is not McHenry, but the House committee will vote on legislation aimed to create a clearer pathway for digital assets to move in the second week of July. I mean, we're talking second week of July. That's when I'm going to Los Angeles to film Killer Whales next week. When I come back, this is going to be voted.
Have a look in the show group, big news.
Oh, okay. Ferdy says big news. Have a look in the show group. Yeah. What am I looking at?
Go to Joe's tweet, look up about BitGo drops plans to buy rival crypto custodian Prime Trust. The deal's off.
Oh, okay. So Prime Trust, this deal's off. The deal's off. I thought it would be off, and I'll tell you in a second why the deal's off. I've got the inside scoop, and just remember that you heard it here first, because we do have the scoop for you about what happened in Prime Trust. Anyway, let's talk about the narrative, because I promised you guys a narrative. So if you are trading narratives, I think I might have a narrative for you. It could be a long-term narrative too, so it might be a long-term narrative. You can decide. I'm only going to give you the information. I'm going to show you the different options. I'm going to show you why I think what I think, which is the way I like to do things. And then I'm going to leave you guys to swim on your own. So what we're seeing now is, we are seeing that there is a lot more institutional involvement in crypto. And this institutional involvement means that in crypto, we're going to have to start trading the way that they start trading. They're not going to trade like we trade. We're going to trade like they trade. When the big institutions and the big hedge funds come into crypto and want to trade, the one strategy that they deploy, which we in crypto don't deploy yet, is options. There's a lot of, in the traditional world, options are a much bigger asset class than the underlying asset class by a factor of 10, 20, 30, 40, 50. So what I think is going to be the next narrative, or one of the next narratives, is options. Now you can see this. On 𝗏𝗏𝗏, the options volume is at a 3-month high, which means that when this narrative broke of the institutions coming into crypto, people actually started to buy options. They said, look, I don't want to be buying the actual underlying asset now. What I'm going to do is I'm going to buy an option so that I can buy Bitcoin at a future point in time, maybe after the ETF. That is what an option does. So as you know, we are partners with 𝗏𝗏𝗏. We're teaching you guys how to use options. We'll leave a link in the description below to a show that we did back a while back where we told people how to buy options, and we're going to continue to educate you guys on options. But that's not what this is about. What this is about is the opportunity to invest in the next narrative in crypto, or one of the next narratives in crypto. What is the next narrative in crypto, or one of the next narratives in crypto? Options. Right now, if you want to buy options in crypto, here is the landscape. You've got 𝗏𝗏𝗏, which is centralized. You've got Bybit, which is centralized. You've got OKX, Binance, Delta Exchange, PowerTrade, Evo, Lyra, Bit.com. There are also some decentralized players. Now, we've made this list for you guys. It shows you all the different options players that we found. So you've got Ribbon Finance, Premier, Dopex, Lyra, Hedgic. We've got the market cap here. We've got the fully diluted value, the FDV, the fully diluted value. You've got the volume that's going through, and you've got the TVL. I think you may want to have a look at these narratives if you want to play the options game. And remember, I said to you, to play the options game is a very simple thing. You just find the option, you find the narrative, put your money into the narrative, spin the slot machine, and then you hope and pray that the narrative plays out, and this actually makes money. And I think one of those narratives can actually be crypto options. So that is something that we need to spend some more time on. That is something that we need to spend some more time on. And actually, I see here in the show group, if you, I see this, okay. So if you want to invest in another narrative, maybe layer 2s is actually a good narrative. Because, why? Because there is a new ETH upgrade called EIP4844. And what EIP4844 does is it reduces the rates and the fees that layer 2s have to pay to synchronize with the main chain, if I were to summarize it. And what 𝗏𝗏𝗏𝗏, who's by the way one of our analysts, what he says is, he says, if we consider the price impact, layer 2s are going to become much more profitable. And if layer 2s become much more profitable, then number go up. So if you believe this, follow Paddy the Pirate, Saint Paddy Pirate, and you can then decide whether you believe in his theory that these layer 2s are actually going to go up. Just had a lot more to talk about today. Probably a good time to remind you of two things. First thing is, we're going to be in the Banter Bubbles. If you have downloaded the Banter Bubbles, we will give $1,000 a day away to someone who's downloaded the Bubbles every single day. You can download it on iOS and Android. And if you're caught in the Bubbles, you'll get double the winnings. It's also a great way to support us and support our community. Also, probably a good time to give a shout out to one of our partners, which is Swissborg. If you want to get money on and off the crypto ecosystems, and you want to do it in a safe and secure and regulated and legalized way, there's a link below. Sign up to Swissborg. Download the app. You can then get money on and off the ecosystem using Swissborg. And in the next couple of days, we're going to talk about a whole lot of other features that you can actually do if you've got the Swissborg app. So go and check it out. Go and check out there's a link below on the app, on desktop. Otherwise, as usual, let me just look at my position here. You see, I took a BCH position. Let me just see if I can show you guys. Hold on. Let me just find a way to show you guys without showing you guys my life. Okay, there we go. So I did take a BCH position earlier. Not earlier, 2-3 days ago, because I kind of saw this narrative. I took some profit. I took about $5,000 profit. I'm still holding it, still holding strong. I see I'm playing the narrative. I'm trading the narrative, but I'm investing in the future. That's what I'm doing. All right, listen, I'm going to see you guys again in 9 minutes on the Twitter Spaces. Until then, trade well, my friend.